Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we are going to be looking at the weekly Forex forecast for the coming week. If you are new to the channel and wish to be staying updated with our weekly Forex forecast, you can do well to subscribe to the YouTube channel and also join the free Telegram community where you can have access to chart analysis. And if you're interested in the daily market forecast breakdown videos, then you can do well to join the Gold membership to have access to the daily market forecast breakdown. Let's head to the chart to look at the forecast for the coming week. So guys, this is the dollar index and this is the monthly time frame. So we're going to look at price delivery from the monthly time frame so that we can actually identify ideal price level that we are actually seeing price drawing to take out liquidities. So what we can see here is price took out this external range liquidity, and there we can see that the month of September actually gave us a down close candle. So we can see our draw on liquidity is actually this sell side liquidity. Price gave us this bullish move to the upside, failed to take out this buy side liquidity, and then you can see we're having this bearish push of price to the downside. So this is actually our drawn liquidity, and we can see we're having this unmitigated fair value gap. So we're looking forward to see that price will further deep to the downside, take out this sell side liquidity and mitigate this fair value gap. And slightly below this fair value gap, we have this other fair value gap in confluence to this base price level. But we are actually looking at price taking out this sell side liquidity first, and then the mitigation of this fair value gap. So for us to actually have price continuation to the downside, we actually want to see the push of price into the 50% of this candle volume. And then we frame the bearish move of price further to the downside to take out this sell side liquidity and mitigate this fair value gap. So let's actually go to the weekly time frame. So here in the weekly time frame, what we can see we identified last week was the sweep of this sell side liquidity with this price candle. So we actually anticipated to see for the push of price to the downside to take out this sell side liquidity. But before we actually called out the bearish move of price to the downside to take out this sell side liquidity, I told us to anticipate the pullback of price into the 50% of this candle week. And then we can begin to frame the sell-off from any price zone we identify in the lower time frame, which we actually identify in the daily time frame and also in the 4-hour time frame. And then we can actually take our entry for the bearish move to the downside for price to take out this sell side liquidity. And you know that this is the sell side liquidity we're looking forward to see that price would actually take out and mitigate the fair value gap we identify from the monthly time frame, which you can see also in the weekly time frame. We are having this fair value gap, and we can identify this institutional order flow. So for the coming week, I'm expecting to see the push of price to the 50% of this monthly price level, or we see price mitigate the 50% of this weekly candle week, and then we have the continuation of price to the downside to take out this sell side liquidity. So we are actually going to drop to far lower time frame so that we can identify the zone we are expecting to see the mitigation when we have the bullish push of price to the upside, and then we frame the bearish fall of price to the downside. So let's go to the daily time frame. So here in the daily time frame, we identify how price have actually been moving within this range, and then we identified this daily inversion fair value gap. Our price return mitigated, pushed to the upside, broke through it, return retest. So we actually saw this price candle on Friday, and then this was the highest high that price created. So we expected to see that price will mitigate the 50% of this candle week in confluence to the weekly candle week also, because we also saw this liquidity void in the daily time frame, and the 50% level of this candle actually coincide with this liquidity void. And then we saw price on Monday push to the upside, mitigated the 50% of this candle week into this liquidity void. And then you can see we have the fall of price, and price took out last week's sell side liquidity. So for the coming week, we are still expecting more bearish move of price to the downside to take out this sell side liquidity. So we're actually going to drop to the 4-hour time frame so that we can have clear perspective to the push of price to the upside and the zone we'll be looking forward to see price sell off from. So basically what we can actually see from the daily time frame is the possibility of price pushing to the upside back into the daily inversion fair value gap, and then we frame the bearish move of price to the downside, because you can see this is actually the price level we identify from the monthly time frame, the 50% of the candle volume. And what we can see here, we have this mitigation block. So we could still see this reclaim price, and then we have the fall of price to the downside to take out the sell side liquidity. So let's check the 4-hour time frame. So here in the 4-hour time frame, if you can see, this was what we anticipated to see last week. You can see the liquidity void, and we saw this rejection block. So I told us to anticipate this push of price, and then we're going to see the bearish move to the downside to take out the sell side liquidity. And we can see the push of price fell, return, and further fell to the downside. So last week was actually a fulfilled trading week for us. So what we can see is that price returned neatly into the liquidity void, and then you can see the fall of price to the downside. So I'm still expecting to see that price would push to the upside, and we could see price take out this buy side liquidity, mitigates the daily inversion fair value gap again by grabbing this buy side liquidity, and then we see price falls to the downside and then takes out the sell side liquidity. So I'm still expecting the push of price to the upside, take out this buy side liquidity, and in extension we could see price sweep this buy side liquidity to mitigate the daily inversion fair value gap, and then we have the bearish push of price to the downside. Let's check out the 1-hour time frame. So this is the 1-hour time frame, and what we can see from the 1-hour time frame, we can see that price took out this low point. So we actually have the break of this structure to the downside, this swing low, and we can actually see that price also took out this low point. So let's actually identify that. So we actually have a valid break of structure to the downside. So I'm expecting to see that price will push back to the upside, and then we have the push of price to the downside. We can see this liquidity void, actually price return into it, but this is also likely to attract price again to the upside, and then price would actually mitigate it, and then we could see price take out this buy side liquidity, and then we have the fall of price further to the downside, because you can see in confluence to the 50% price level of the monthly candle we identify, you can see we have this order block and we have this fair value gap. So we could see further push before we have the fall of price to the downside to take out our sell side liquidity. And in extension, we're looking forward to this sell side liquidity. So this is what I have to show us, guys, in the dollar index. So let's check out the Euro USD pair. This is Euro USD, and this is the monthly time frame. So we can see that price has been attracted to this buy side liquidity. So you're looking forward to see that price will take out this buy side liquidity. So you can see we had this pullback, price failed to take out the sell side liquidity, and then we're having a bullish push of price to the upside. Just the way you can see in the DXY, we had a bullish push of price to the upside, but it's failed to take out the buy side liquidity, and then price fell to the downside, being attracted to the sell side liquidity. So for Euro USD, we can see price attraction to the buy side liquidity. So this is our drawn liquidity. So I'm expecting to see that price would actually pull back into the 50% of this candle week, and then we can actually see price further push to the upside to take out this buy side liquidity. So this is actually the monthly time frame. So let's go to the weekly time frame. So here in the weekly time frame, last week we actually expected to see that price would take out this buy side liquidity, and we can see we have a buy side liquidity sweep. So we're expected to see price will fall into the downside before we have the push of price to the upside. and we identify the zone from the daily time frame to the 4-hour time frame and down to the 1-hour time frame. So now we can see that our target is actually to see price read this buy side liquidity, but we are actually having this rejection block. So we may see price face resistance at this zone before further pushing to take out the buy side liquidity. So what we are expecting for the coming week is to see a pullback to the downside into this price level we identify from the monthly time frame, which we can also see is approximately to the 50% of this candle week. And then we can now frame the push of price to the upside. And actually, we're actually having an implied fair value gap. So we can anticipate the fall of price to the downside, and then we see the push to the upside. So we shouldn't actually extremely target the buy side liquidity. We should look forward to see reaction of price slightly within the rejection block zone before we further frame the possibility that price will continue to the upside. So let's check out the daily time frame. So here in the daily time frame, what we can see is this daily inversion fair value gap. And we can see how price have been ranging, because last week we identified this breakout block. We expected to see the push of price. This was Friday's candle. So we expected to see price push to the downside, mitigate the breakout and this candle week. And then we frame the push of price to the upside to read the buy side liquidity. And we can see price neatly delivered, and you can see the push price swept the buy side liquidity. So what we can identify here is this daily inversion fair value gap, and we can see how price have been respecting it. Price closed below, return closed above, price return closed above this inverse fair value gap. So what we are seeing from the monthly time frame is the price level here we identify from the monthly time frame. So when we drop to a lower time frame, we're going to see a build-up of liquidity below here. So I'm anticipating to see the possibility that price falls to the downside and possibly read this liquidity resting here. Or we can see we have this rejection block within this breakout block. So price may fall further to the downside before the bullish move, or price may return and still react at the inverse fair value gap. And then we have the push of price to the upside. So we are targeting to see that price will take out this buy side liquidity, and then we look out for the reaction within the rejection block before we aim for the external buy side liquidity. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we're going to actually identify is this is the daily inversion fair value gap. And within the daily inversion fair value gap, we can also see the 4-hour inversion fair value gap. This is the 4-hour inversion fair value gap. And you can see the 50% price level we marked from the monthly time frame. Now, this is where I actually spoke about the build-up of sell-side liquidity here. So we may see price fall to the downside to take out this sell-side liquidity, and then we're going to see price reaction at this order block. So we'll be actually looking forward to see the reaction of price at this order block, and then we frame our bullish move of price to take out our buy-side liquidity reaction within the rejection block before we extend to see that price would actually sweep the external buy-side liquidity. So this is actually what I'm expecting to see in the coming week in the Euro USD. Let's check the 1-hour time frame. So this is the 1-hour time frame. So we can see that build up of sell side liquidity, and we can see that price fell to the downside, respected the daily inversion fair value gap in confidence to the 4-hour inversion fair value gap. But I'm still expecting to see the possible push of price more to the downside into this order block we identified from the 4-hour time frame. You can see we have this fair value gap. So price may further push, take out this sell side liquidity, mitigate this zone, and then we can frame the push of price to the upside. So in the daily Forex market breakdown videos, we're going to actually identify price reaction when price is actually dropping to the downside, and then we can look forward to frame our entry from lower time frame. And in the situation where we do not see price returning to this price zone in the daily Forex market breakdown video, we're still going to anticipate how to take our entry. So you can see last week we identified this particular zone and we expected the fall of price into this zone. This is an order block zone we identified from the 4-hour time, and you can see how price fell into it, and then we had the push, price return for the push. So we're still expecting to see more push, price stick out this buy side liquidity, reaction at the rejection block, and then we further frame more bullish if price is actually going to aim for the external buy side liquidity. So let's check out the GBPUSD pair. So guys, this is GBPUSD and this is the weekly time frame. So last week we identified the sweep of this buy side liquidity. So we anticipated for the bullish move when price deep lower to the downside, though price did not dip far lower to the zone we actually identified in the lower time frame, and then price took off to the upside. We're looking forward to see price actually return into this fair value gap. So I'm still expecting bullish move in the GBPUSD. So let's check the daily time frame. So here in the daily time frame, we can see a sweep on buy side liquidity. Now we can see price push to the upside. So I'm actually expecting to see that price will pull back to the downside and take out this sell side liquidity. So I want to see the reaction of price at this implied fair value gap. You can see in confluence with this particular candle week. So we have the implied fair value gap. So I want to see price take out this sell side liquidity, and then we frame the bullish move of price to the upside into this fair value gap. So let's check the 4-hour time frame so that we can identify zones below this sell side liquidity. So this is the 4-hour time frame, and you can see this is the zone where we actually have our implied fair value gap we identify from the daily time frame, and you can see in confluence that we have this order block. So I'm looking forward to see that price will fall further to the downside. What we can see is that price reacted at this 4-hour inverse fair value gap, and then we had the push of price to the upside, but price failed to actually take out this high point. So we're seeing price fall into the downside. So I want to actually see the fall of price to the downside, price return to retest the inverse fair value gap, and then we want to see price take out this sell side liquidity. So I'm looking forward to see the reaction of price after price takes out this sell side liquidity to actually frame my bullish move of price into the weekly fair value gap we identified. So we want to see price take out this buy side liquidity. So we'll be looking forward to see that. But in the case where price reacts at the 4-hour inversion fair value gap, mitigate the mean threshold and push further to the upside, we're going to identify that in the daily forecast breakdown videos to actually look out for how we can frame our entries to the upside to actually see price push to take out this buy side liquidity into the fair value gap. So this is what you should actually know about the GBPUSD. So let's check the 1-hour time frame if there is any further price delivery we need to interpret. So we can see this is the 1-hour time frame. So we can see price fail to create a new high. Price is actually dipping lower to the downside. So we could really see price take out this sell side liquidity. So price may actually really dip far more lower to take out this sell side liquidity, and then we have the push of price to the upside. So this is what you should know about the GBPUSD. So let's check out the USDCHF pair. So this is the weekly time frame for the USDCHF pair. You know, I've been anticipating to see that price would actually return into this weekly fair value gap, take out this buy side liquidity before we have the push of price to take out the sell side liquidity, and in extension, the sell side liquidity. But what we can see is that price is actually reacting at this rejection block and also failing to return into this weekly fair value gap. So we are having price ranging. So I'm still expecting to actually see price takes out this sell side liquidity, since I'm actually expecting more bearish move in the dollar index. So let's check the daily time frame. So here in the daily time frame, what we can actually identify is the ranging price condition we actually have in the USDCHF. So we can see that price is being attracted to this sell side liquidity, this sell side liquidity. So I'm expecting to see that price push back to the upside into this mitigation block, and then we can frame the bearish move of price to the downside, except otherwise price decides to push more to take out this buy side liquidity, react at the rejection block, and not necessarily return to the weekly fair value gap, and then price falls to the downside. But I'm actually looking at this mitigation block, see price reaction either at this price level, and then we have for the push of price to the downside. So we actually have this price level to look forward to, and then we actually look at the lower time frame to see the structure within the lower time frame, or else price will take out the buy side liquidity, mitigate this candle weak, and then fall further to the downside. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is that in confluence to this price level we identified from the daily time frame, we can also see we have this inversion fair value gap, and we have this institutional order flow. So price may actually mitigate the institutional order flow, and then we actually have a continuation to the downside. So we may have price ranging before pushing really to the upside into the inversion fair value gap and this institutional order flow, and then we have price continuation to the downside. So that's if the USDCHF doesn't maintain its ranging market condition. So let's actually check out the USDJPY pair. So guys, this is the USDJPY pair, and this is our weekly time frame. So if you guys can remember, last week we actually identified this rejection block, and we expected to see price would actually push to the upside into the rejection block, and then we're going to have the rejection of price to the downside, because we're looking forward to see that price would actually take out this sell side liquidity, and in extension we're looking forward to this sell side liquidity, and then we have this fair value gap below this sell side liquidity. So we identify the sweep of this sell side liquidity, expected the bullish move into this rejection zone, and then the fall to the downside. So we can see that price did not really fall to the downside to take out the sell side liquidity. So we're still expecting the rate of this sell side liquidity in the USDJPY. So let's actually have a quick look at the daily time frame. So this is the daily time frame. You can see we identify this order block in the daily time frame, and this is the rejection block candle level that we actually identify from the weekly time frame, and you can see we have this order block. So that helped us establish the confluence of actually seeing price return and then face mitigation and then falls to the downside. So last week, if you can vividly remember, I told us to see the push of price because this was Friday's candle. We wanted to see the reaction at this fair value gap, return into this inverse fair value gap, and then the further push into the rejection block zone and the order block, and then we're going to actually see price falls to the downside. So for the coming week, I'm expecting to see pullback to the upside into this breakout block, and then we have price continuation to the downside because our target is actually this sell side liquidity. We're looking forward to see the price will take out this sell side liquidity. So let's check the 4-hour time frame. So here in the 4-hour time frame, you can see previous weeks we saw this liquidity pool. We expected that rate of this liquidity pool, price reacts at this fair value gap. So you can see we had the push, reacted at the inverse, and price pushed to the upside. So what we can see now, we have this bearish expansive candle to the downside. So I'm expecting for the push of price to the downside. And what you can see, we have fair value gap. So I'm expecting to see the push of price to the upside into this fair value gap. And then we'll begin to actually look out for our sell setup within this zone. And then we actually take our entry and then see how price push to take out the sell side liquidity. So this is the anticipation for the price movement we're expecting to see in USDJPY. So we can actually identify this breaker. So we can identify this and see the push of price into this level and then the fall off to the downside. So this is all I can show you guys in the USDJPY pair. So in the daily Forex market breakdown video, you're going to actually look at how price delivers and then how we can actually execute our trade. So let's check the gold pair. So guys, this is gold pair, and we know gold has extremely been bullish. So last week we anticipated to see the price falls to the downside to mitigate this candle week or fall into the weekly fair value gap before we have the push of price to the upside. But then we can see the price return into the 25% of this volume, and then price continue the bullish move to the upside. So last week we actually didn't see price returning down to this price level we anticipated. So during the week we actually framed our entries based on the structure we identified in the lower time frame, and then we took our buy setups in the gold pair. So for the coming week, I'm actually expecting to see price push further to the downside into this weekly fair value gap. So you can see we have a close week, but I'm expecting to see a pullback to this weekly fair value gap, and then we frame the bullish move of price to the upside. But when we actually identify that the market is not actually pushing into this weekly fair value gap, so in the daily Forex markets focus breakdown video, we are actually going to now frame our bullish move if actually gold is actually going to continue extremely bullish. So let's check the daily time frame. So here in the daily time frame, what we can see is that price is reacting at this daily fair value gap, and this is the weekly fair value gap we identified. So I'm expecting to see that price would actually possibly violate this daily fair value gap and then deep into the weekly fair value gap in confluence to this institutional order flow. And you can also see we have this fair value gap here, because when price deep lower, we're actually going to have price dipping into a discount rate, and then we can frame bullish move to the upside. So I'm looking forward to see reaction of price at the daily. If price continues bullish from the daily, then we can actually execute our trade, and that would actually be made available in the daily Forex focus breakdown videos in the gold membership, and then we can continue bullish. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is that price created this high, price fell to the downside, took out the swing low. So we actually have a minor market structure shift to the downside, and you can see we have this liquidity here. So the market may actually really dip more lower, take out this liquidity to get the weekly fair value gap, and then we have the push of price to the upside. So this is just a quick one. This is just what I want to show you guys. Let's check the 1-hour time frame. So here in the 1-hour time frame, you can actually identify that price mitigated this order block. We have the push of price fell, push. We have price took out this swing low point. We have a minor market structure shift. So we're seeing price pulling back into this fair value gap and this order flow. So we could see price push downwards to take out this sell side liquidities, because now what we can identify is the displacement to the downside. Price is reacting at the daily fair value gap, but due to this liquidity push we're seeing here, the market may actually dip more lower. So it is either we see that price actually returns to this weekly fair value gap, or we see price actually return into this order flow, and then price continues the movement to the upside. So in the daily Forex market focus breakdown videos, we're going to actually look more into that when we see price delivery. So cheers guys, till I see you guys again next week. God bless you all.